Hey there, it's monthly market report time. Most of you are simply looking for a summary about what's going on in the desert real estate. That's helpful, but there's so much more information to market insights than a summary. A lot more data than whether prices are going up or down or the market is slow or hot. What you hear on TV and radio is usually pretty negative, like the sky is falling or recession up ahead. That's boring, and it's actually not very accurate. But unfortunately, it's what everybody's talking about and listening to. They don't talk about inventory levels, days on market, seasonal averages, attrition rates, and discounts. All of these data points paint a picture and tell a story. Consumers want to know how the data affects them, right? You know, what's in it for me? So I'm going to break down the component data points for you, how they're related to each other, and share my market insights. Stay tuned. I'll be right back. Hi there, it's me, Stefan Burchard, the Desert Boat Realtor here in the Greater Palm Springs region. I record and post content here about the local market and the desert lifestyle because I love what I do. More importantly, I believe real estate should be fun and easy. So you're back for what's in it for me. So let's get to it. Median prices. For the Valley, homes closed at $660,000, which is down 3.1% from last year, and condos closed at $435,000, which is down 6.5% from last year. Those numbers are for the whole valley, and breakdowns of the same stats for each city are in the chart I send out every month, and they're also linked in the video notes. This information is important because it shows how prices are trending. Buyers and sellers will get an idea on prices for the whole valley or a particular city. The percentage change gives you an idea of how prices are trending. If you need more detailed information about neighborhoods or subdivisions, give me a call, text, or email. I'm happy to break it down for you. I stay on top of this information every month, and it's pretty easy for me to do because I love data. I know, weird, but I love it. Months of supply. Valley months of supply still stands at 3.1 months, which is more than last month, but up 40% from last year. Months of supply is important because if no new homes are added to the market for sale, then we only have less than 3 months of homes to sell at the current tempo. This is also known as the attrition rate. It is one of the measures showing how quickly homes are moving. The higher the demand, the lower these numbers will be, depending on inventory levels, of course. But inventory comes later. Hold tight. These statistics are broken down by each city and price point in the full desert housing report that you can find on my website and in my newsletter. Days on market. Days in market, days on market. Honestly, it's the same thing. People actually argue about this. Go figure. This is the average time a property is on the market for the valley. This number can also be higher or lower in any particular city or subdivision and even price points. Currently, our days on market is 38 days. It is the same as last month, but up 18% from last year. We are seeing it slowly creep back up, but it is still below our pre-pandemic average of 65-ish days. We are not predicting a return to those pre-pandemic averages due to the higher demand for desert properties. And thanks to interest rates, we don't see it returning this year. Wah, wah, wah. Each city and price point is also broken down in the full report. There's a lot of information in that report for you data junkies. I promise. Why is this important? Well, sellers can get an idea of how long it might take to sell their home. And buyers can get an idea of the average time homes are on the market for a particular city or price point. If a home has been on the market longer than these averages, hey, who knows, the seller may be willing to negotiate. For example, just because a home may have been on the market for 50 days doesn't mean squat if the average days on market for this particular area is 65 to 70 days. Right now, believe it or not, there's a lot of motivated sellers negotiating because home sales are slower than they were over a year ago. If you know of someone considering buying or selling in the Greater Palm Springs region, give me a call, text, or email. I promise to take amazing care of them. Inventory is the current number of properties that are available for sale in the market. Our inventory currently stands at 1,762 units, which is down 2.4% from last year. Let's put this in perspective. At the height of the pandemic, inventory was reduced to less than 600 units. Before the pandemic, our inventory averaged between 2,500 and 2,900 properties. Inventory really doesn't mean squat without understanding other stats and how they work off each other. We'll get to that soon, I promise. Over time, you can see how this inventory number has decreased since 2018. This shows the increase in demand for desert homes. Now, notice before 2020, we had 2 seasonal ups and downs. Those were normal for our market. Then around May of 2020, you can see the result on our inventory due to what I call the COVID rush and the extremely high demand for desert properties. Next, we have sales volume. This is the actual unit sale activity that happens monthly. For the Greater Palm Springs region, this is broken down into two graphs because the seasonality affects our sales activity. We have a 3-month average and we have a 12-month average. For the 3-month average, we currently have a combined total of 532 homes sold. Before the pandemic, September sales averaged about 700 to 800 units per month. Notice how the graph jumps up and down as it follows our seasonal pattern. Then, September of 2020, we were starting to see the market return from the California shelter in place and that increase in high demand. It shot up to over 1,000 units per month and got as high as 1,300 units in early 2021. That high demand activity eroded our inventory to below 600 units. 600 units is like 25% of our normal inventory. The 12-month average removes seasonality and shows trends in how homes are selling year over year. There are no seasonal ups and downs on this graph. Notice how it shot up during COVID from July 2020 to July 2021, and we're still seeing below pre-pandemic averages of our 800 to 900 units. Before COVID, there was relative stability in this graph. It skyrocketed during COVID and is now slowly returning. Notice the steady decline since July 2021. This was due in part to the lack of inventory. Notice the leveling off over the last couple of months. These numbers are important because they show buyers and sellers how many homes are selling desert-wide and are a good indicator of demand. When coupled with unit sales and average days on market, we're down approximately 30% from our pre-pandemic averages. Currently, we're at 573 units per month. High unit sales and low inventory pushes prices higher, and lower unit demand and increased inventory softens prices. Basic economics, right? Selling over list price. This shows how many homes are selling above or below list price. A positive number means they're selling above list price, and a negative number means they are being discounted off of list price. This graph demonstrates the demand, but more importantly, competition. This time last year, more than 28% of homes were selling above list price. That's down from the high of close to 60% of homes selling above list price during the COVID rush. Currently, we're at 17.1%. That's slightly below last month. It shows we're seeing good activity and that homes are selling closer to list price. Before the pandemic, we would only see about 10% of homes selling above list price. Pricing is the most important factor, in my opinion, and a major key to creating strong interest in properties. I believe if a home is priced and staged well, it sells at or above list price. Wow, that was sure a lot of data. And I'm not done yet. I believe knowledge is power. So now you understand this data a little bit better, you can make more informed decisions with confidence. Woohoo! Oh, yeah, my market summary. That's right. Okay. Sales are still hovering roughly 30% below pre-pandemic levels. However, it is on the rise from the decreases we saw since late last year. The current decreases we are seeing are following our seasonal trends that we see every year, coupled with those pesky interest rates. The market is stable because we have a good balance of buyers and sellers, so it is a healthy market. Slower than usual, but healthy. As inflation cools off, which we are slowly starting to see, we will hopefully see interest rates creep down a bit. That will increase our activity in our market, and especially across lower price points. Don't hold out for those 3% interest rates that we had in 2020. I'll be shocked if I see that anytime soon in my lifetime. Remember, don't wait to get into real estate. Get into real estate and then wait. You can always refinance when rates drop if you can qualify at the current interest rates. Just saying. Hey, please like, comment, and share this video with a friend or family member who may be looking to buy or sell here. Now, watch this awesome video about how I got into real estate. It's a hoot. Bye. Below list price. A positive number or down, or the market is, and whether prices are going up or down, or the dun, 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 dun.